Hi, folks. Welcome to the Short Vol Show Sunday. My name is Dave. I just wanted to say hi to you after a weekend. There was a bunch of news out this weekend. And I was watching H3H3 Productions. I don't know if you ever get to watch him. And they were showing this helicopter thing. I don't know if you've seen this, but this helicopter video came out last week. And basically, this lady just, she injured her leg a little bit. And this helicopter came to pick her up, a 74-year-old woman, and this is what happened. I don't know if you've seen this one before, but this is what happened. So they pick her up, they strap her, and she wasn't that badly injured, just hurt her leg a little bit, but watch what happens.
Oh, got the spin. Well, I gotta let him back down. Try to get that under control.
So the thing starts spinning like crazy. And I mean, she must, it turned out that she was not hurt. That's why I'm showing this. But look at the thing is spinning like a top. And this video went viral last week. And they even had her on Conan. They did this goof with her on Conan. So look, it keeps spinning. And finally, the helicopter pulls away. And it turned out that they figured that it was better just to pull away because it was this wind in that canyon that was causing it to spin. And Conan did a little blip on it a little bit later where he had the lady on the show.
Now, please welcome the rescued hiker, everybody, and we're very happy to
My life is a living hell!
So she was okay, and they goofed on it on Conan. I thought it was kind of a funny video. Anyway, so I'm looking on Sunday night, and futures are up a little bit. I don't have much of a position in anything right now, so it would figure, when I'm all cash, what would I love the most? I'd love for the market to crash or something when I'm all in cash. But of course, it's up a little bit. So, but I was looking at Drudge Report, and I know the Republicans in the room will not believe this at all. And I almost don't believe it at all because, these polls were so wrong before. But Fox News poll shock, and this is from Drudge Report, which is a conservative outlet. Bernie leads Trump by 9 points. Biden dominates battleground states. And most people consider it like a foregone conclusion that Donald Trump could easily beat Biden. And this is coming from me, who's a lefty, which I kind of agree with that too. But nevertheless, Fox News poll having Trump in fourth place behind Biden, Elizabeth Warren, and Bernie Sanders on this poll that came out this evening. Or, I'm sorry, today, I believe, was the poll. Also in the news, we had there was this thing about the Persian Gulf where the president came out and said that they released this video footage of these people in this boat supposedly taking a mine off of a Japanese tanker. And the story supposedly, when it came out on Fox News, was that the Iranians tried to take out this Japanese tanker, and they had put these mines on it. And then they were trying to remove one of the mines because it would be evidence of what they were doing. Well, people came out and said, actually, if any attacks that had come through the air and not through people putting mines on the side of a tanker, and that this was a bunch of garbage. And there's been all this stuff against the U.S. reports of this. Iranian speaker hinted Sunday that Washington could be behind this quote-unquote suspicious tanker attacks in the Gulf of Oman to pile pressure on Tehran. And it's thought of as somehow increasing hostilities with Iran. And we'll have to see if the U.S. ends up going into the war with Iran or not eventually, but things are definitely heating up over there. It doesn't seem to be affecting the market right this moment, however. Okay, so on to more news. Alex Jones offers $1 million reward as FBI investigates child porn planted on InfoWars server. And, this is Alex Jones getting back in the news. and we'll see if he's able to capture some headlines, get more of his previous shine back. Besides that, I have been watching, as I said before, The Handmaid's Tale, Billions, and Big Little Lies Season 2 back on, which is very interesting. Let's take a look at volatility. And, we saw things pretty firm all week, and then things kind of backed off a little bit Friday. So if we look at the VIX, and I get out of the way here, and this, I think I need to reboot my setup. So let me do that while I'm talking to you. But essentially the VIX came in, and now I'm going to lose my whole screen again. VIX came in a little bit during the weekdays, and especially on Friday, down below 15, and contango is building a little bit now, back over 5%. So we'll have to monitor that closely. But I know people have been getting impatient with UVXY and VIX products staying in this sort of range for the last week or so. But, have patience. Contango is working, and they will move lower minus some sort of spike right now. It's just not a whole lot going on. People get nervous if things don't move lower quickly, and they take their position off or whatnot. But I think maybe patience is in order. And what I'm going to try to do is quickly close OBS and reopen it because it's blocking me, and we'll see if this works. So I'm going to close OBS quickly, stop recording, and then start again and see if we just pick the stream right back up again. So let's see if that works. Ready, set, go. All right, so here we are back. Hello, we're back on, and I have picked up my my charts again, which is great. So maybe that's the answer when my charts disappear. So if we pull up the VIX here and we look at the chart, you can see, and if we go down to like a 10-day, we can see, it kind of being at the bottom end of this range that it's been in for a while here, and maybe breaking out to the downside. We'll have to see what happens tomorrow, but we are increasing in contango, and we could see this finally move back downhill. Interested to read a bunch of articles about recent IPOs. I haven't talked about Chewy, but Chewy was an IPO which happened on Friday. My parents just got a new puppy dog, and they have been ordering stuff from Chewy. And Chewy, I believe, IPO'd $22 and was quite a successful IPO, as the opening range got up to 41, ended up closing 34. So 34 up from 22. Decent first day for Chewy. This comes along a string of recently successful IPOs. You'll know BYND because I've been talking about trading that a lot. That was a successful IPO. Lyft, maybe not so much, but Uber was a good IPO. And we had Fiverr last week, which I use Fiverr all the time for the YouTube channel. I think people that are into YouTube will be familiar with that particular one. And let's see what else we have. CrowdStrike stock nearly doubled after IPO. Let's take a look. So CrowdStrike, CRWD, had IPO on Tuesday. And priced an initial public offering on Tuesday evening at $34, higher than the expected range. They were able to raise more than $610 million at an initial valuation of $6.7 billion. Shares gained as much as 97% in the Wednesday session. That they pulled back to trade lower than the opening price of $63. The stock closed up 71% from its IPO price. So that's pretty good. CRWD is the name. So it has been a fertile time for IPOs and IPO activity, and that is definitely interesting. So we see, boom, CRWD up from its initial price of 34, more than double still, or slightly under double its initial price of 34 right now, but still doing quite well. And when you're looking at like I was talking about shorting BYND, that sort of thing, and you see all these other IPOs just going straight up, it kind of gives you pause, and it also kind of makes you understand, oh, well, that, it's not so unreasonable to see BYND going straight up when you see all these other IPOs going up precipitously. However, there were several tweets about BYND, about how its valuation is ridiculous compared with other companies. And let me see if I can pull up a couple of those on StockTwits here. There's always interesting stuff, plus and minus, and usually it's just people talking smack with each other. But let's just go through a couple of these tweets about BYND. China's green will pick up some calls at open and ride the wave a little. I'll hold my puts for 1 week more, see how it goes. There's people like very bullish. There's people very bearish. If you're trading Tesla, read this. Wow, that's a good clickbaity title. Read this Trader Elite blog. But you got to pay $97 to read that. Maybe we don't want to read that. Okay. Pictures of meat. I just want to see if I can find the BYND, the interesting one I saw that compared it to other countries. It was saying, okay, Apple worth $900 billion. What would it be worth in BYND terms? And it was like way higher. And I don't know exactly how much this stuff applies, but definitely a rich valuation for BYND. And, I'm kind of on the fence here about maybe putting a small short on here. At a minimum, it seems like that it'll pause from going up a lot more at some point. Look at that one. What happens when you eat pea-based food? It's got some psycho there from The Exorcist, I believe. And I'm not going to find this tweet because I'm live, and you can't find anything when you're live. So, but anyways, definitely a rich valuation for BYND, and I've laid off being shorted to some extent lately, but I think at some point it will be. Oh, here we go. This is the one I was thinking of. Okay, so we've got Beyond Dumb. It says current Apple $907 billion. Adjusted for Beyond Dumb, and I'm not sure how they're exactly doing this, 17 trillion. I think it means like they're comparing sales versus income for these companies and comparing them to BYND. So they had negative 29 million in income on 87 million in sales. And that just refers to earnings per share, and they're just kind of doing the math in dollar terms, and it's comparing it to these other companies. Now, and basically, this is valued at 68 times revenue, which is a rich valuation. And I'm not sure what price they're talking about. It's probably somewhere around the close Friday, maybe like around 150. But, when you're valuing a company, it's very hard. You have companies like Amazon who are expanding and putting money into expansion that don't make money for years, and their price goes straight up. You really have to do things on a case-by-case basis. This sort of comparison is slightly silly, but it does highlight the point that this thing is at a rich valuation right now. That's not to say that it might not go up way more still, but it is a case for the downside a little bit, and I'm definitely thinking about dabbling in some sort of short here and try to do it in the safest way, quote-unquote safest way possible. And let's just pull up the chart and look at some ways we might short this in a quote-unquote safe way. Nothing's safe when you're dealing with deltas, but here is the story of the chart in the last 20 days, and we saw it rip to 186 like about a week ago, and this is where I did short it around 170 and was able to make a nice win on that. But we've been moving higher ever since. And the question is does this kind of like each time we get lower highs, so it makes this rip up and then it's going to move back down again, and this is going to be kind of like a triangle that comes in, or do we just continue to go higher, higher, higher past that 186 and continue to rage higher still? I think that at some point you know, it has to reach a valuation at some point that where there's an equilibrium at least. And it seems rich so far, but right now I just have the only calls I'm short are the 270s, which are way up there. And when you've got a $150 stock that is trading at over 100 volatility, this one, you know, the second week is I'm showing 130 vol, third week 121 vol. That's expensive option prices by any standards. And so when you have that expensive option prices, there should be a way that you can profit from selling some stuff. It indicates usually that there's going to be a big move, but we've already had some big moves in this one. And if you compare it, I know a lot of people have been comparing this to Tilray, but if you looked at Tilray, what happened was, and if we just pull up that chart, we had this big rip all the way up to, and let me get out of the way once again. But Tilray, we had this big old rip, okay, up to 300. There you go. And then it's just gone down. But look like a week after that, it started building again up, kind of similar to what we're doing now. But then it started to fade. And along with the collapse of the stock was a collapse in volatility. I mean, volatility was over like 100 in this one. It was like 140 or something. And now it's back in the 70s to 60s. So, you know, as people, interest in this is bound to fall off at some point because people can't maintain interest in something for too long. And when it does, vol will come in, regardless of what it's doing for price, A. And B, you know, I don't see people looking to get on when it's already a huge valuation jumping on here. People who have been long it are going to get anxious at some point and looking to get out of some of their shares. At least that's my feeling. Now, if we were to take out this high of 186, then, you know, you'd have to kind of reevaluate. But I'm definitely considering some sort of short here and definitely selling more options, whether it be strangles. You know, the question is not whether you should sell stuff. To me, the question is which stuff should you sell? How do you want to craft a short position? And what kind of deltas do you want to deal with? How much risk do you want to take? Because ultimately, these prices are expensive, and there's money to be made shorting these options. I mean, look, this thing's trading $150, okay? So $50 away from strike. The 100 strike with, let's see, with the 100 strike with a month to go, trading, you know, 340 for the puts. That's rich premium. You know, that's some rich stuff. The at-the-money straddle with a month to go, okay, it's 152 right now, the price of the underlying. So if we look at the 150 straddle, you know, this thing's $40 bid, a $40 straddle. That's a rich thing. Now, of course, it can move $40 one way or the other during that time period, but it can also bounce back and forth around a lot and come in a lot. So the question is, what do you want to sell? And I might think about a strangle. If you do have I kind of have a directional bias to the downside. So to me, it might be like you could construct a strangle, for example, and you might want to give yourself as much time as possible. So go out to maybe August or September. If you really think this thing is going to go lower, you could sell like the 160 call, okay, and like some put that's like way out of the money, like the 70 put, something like that. If you sold the 160 call and the 70 put, okay, that's going to give you a delta. Let's see how many it has. I don't know why it doesn't have just the strangle here, but let me fix this. So what I'm doing right now is I'm putting these prices in, and I'm going to move out of the way so you can see here what I'm doing. So if I were to sell the strangle, the 160.70 strangle for $15, and we're going to model this now, and I'm going to take out of the modeling the rest of my position, which is just this other strangle. But if you sell this strangle 10 times, okay, it's going to get you short 400 deltas. It'll get you short 400 deltas here, collecting $200 a day, but you're definitely short, and you're definitely leaning short deltas, okay? So that's what that does. If you did this strangle 10 times, if you were to sell this strangle 10 times, that would reduce your buying power by $52,000. So, you need a little bit of money in your account to put that strangle on that many times. But you could construct something a little bit simpler than that. Let's just do it 2 times just as an example here. If you were to sell this strangle 2 times, it would take $10,000 in buying power. And you'd be short 88 deltas, collecting 40 a day. And you're leaning short, definitely. It's a way to lean short and sell premium, and it's pretty aggressive because, you need this below the 160 strike by the end of August. But, if you're convinced that this thing is like way overvalued and it's going to leak lower, then that might be a trade you want to do. I like that trade for shorts. If you don't have as much of a directional bias, then you might want to pick a strangle that is equidistant strike. So you've got, or since the puts are a little skewed, maybe the puts slightly farther away, so it's sort of neutral. So let's say this, it's 150. So, a perfect kind of high probability strangle would be the 100-200 strangle. So let's take a look at that one for a second. So we can go to our screen here and look at the August, selling the August 100 put. So I'll click on the bid, and then I'll go to the August 200 call, and I'll hold my control and click on the bid. Okay, so this would be a $15 strangle. Sounds like a lot, right? $1,500 for selling this once. If this stays between $100 and $200 in the next 2 months, which seems like a reasonable thing, right? You got a $100 range on a $150 stock. You're going to collect $1,500 each time you do that. So now this would be $1,300 for each strangle, and you collect $1,500 if it just stays in that range. Now, what you can do is you can put a few of these on and just start to monitor. And if it starts to bite you on one side or the other, then you can start to adjust or hedge yourself a little bit. But in the meantime, take advantage of this rich premium and collect some of that money. Every day, a position like this pays you. So, that if you want to be less aggressive than that, you can be less aggressive still. And you can go out, instead of the 100, 150, you could go to like the 75 put, okay? And let's say the 220 call, okay? 75 put and the 220 call. So let's model that. All right, 75 put and the 220 call. And so the delta on that would be short 12. So, when you are crafting a position with a strangle, if your delta ends up being really close to flat, that means that you've picked strikes that are kind of like equally apart as far as your deltas, and that's going to be affected by the skew to some extent. And also, when thinking of deltas on a strangle like this, I would go ahead and move your position forward towards expiration and see how your deltas change. In this case, they're flattening out more and more as you get closer to expiration. So this is generally, and with any strangle, when you're looking at a strangle where you have options that are far away, you have an at the money, your stock is at the money, you have options, on either side of it. Any strangle, the delta is going to get closer to 0 as the days move forward. That's just the way it works, because as time goes by, it gets less and less likely either way that you're going to have a delta. So when you see an initial delta of like here was 12, you know that as you move the days forward, the delta is going to get closer and closer to 0. So you almost don't need to check it out. However, looking at the delta initially is going to tell you which way you're kind of leaning as you start this trade. And if you do have an opinion in the stock, then you can craft a strangle that kind of leans a certain way. If you feel that there's more risk to the downside than most stocks, there's generally more risk to the downside than the upside. So you might want to just craft a strangle where you're leaning slightly short. And like I said, you can kind of adjust your position as it moves one way or the other, but you want to be a little bit careful about negative scalping. By that, I mean, okay, it moves a little bit one way, so you start to panic and you start to sell shares. Then it moves a little bit back. up and you panic to the other side and start to buy shares. You don't want to do a lot of that because that's going to take out your profitability over time. But anyways, just some stuff to think about as far as crafting a position using strangles. So I hope that you have a great rest of your weekend and that your trading day is rich tomorrow. And I will see you soon in the next video. What I want to start doing is, like, even if I'm going live at weird times, I want to start having my videos come out at 8:30 every day. That way you know when to look for me, because this erratic like videos coming out, like a couple here, a couple there, it's not good YouTube practice. You know, it's been proven on YouTube that having an actual time when your videos comes out is better. So I'm going to probably tape some stuff and have it come out at 8:30, even if I didn't record it at 8:30, because my schedule's so bad with my other side jobs that I can't be here all the time at 8:30, which is frustrating. So please contribute to Patreon. Give $5 to Patreon. Help me get out of this side job that's causing me to not be here all the time, because I want to have a more regular show so that 5 days a week, I've got the show coming on at 8:30 in the morning live. That's what I'd like to do in a perfect world. But in a non-perfect world, I could record the show the night before or sometime earlier, and so at least it's coming out at 8:30. Now, you can't ask questions live necessarily in that format all the time, but that's okay. At least you can come on, get important info about the market, and then go on about your trading day. All right, thanks for watching, folks, and I'll see you in the next video.